Hi all, this is your very own Dhamishta Shah. Last week, when I had done an FB live, there were quite a few concerns regarding mutual fund. So I thought, let me take this opportunity to simplify the term mutual fund for one and all. I have a few notes which I would definitely read out such that I am able to cover up the subject in totality. When you buy a mutual fund, it is basically investing in a pool of investments. That is, when a mutual fund holds a variety of investments that can make the investors to diversify through ownership of individual stock or bonds. Not all investments really work well in the long run, but mutual fund is one investment that beats inflation. Holding a variety of investments help offset the impact of poor performers while taking advantage of the earning potential of the rest. So that is what we call as diversification. When we diversify our investments and ensure that every basket of investment has a particular portion of our investment, our earning, it definitely gives us a return whereby our financial goal may be addressed short term or long term. So basically here, before we decide on which type of mutual fund to go in for, it is better that we understand what are the financial goals that each one of us has. Why do we need to buy a mutual fund? Reason is very simple. One is diversification. So when we go in for a mutual fund investment, there are various options that we have. Maybe a debt fund, maybe one which is equity linked, one which is in liquid fund. That is, a liquid fund option is generally taken when we need a return on a lump sum amount but for a short period. Let's say I park in an amount on Friday and I want to withdraw it on Monday. One of the best options here is liquid fund. Equity fund definitely holds good when we are looking at a horizon of more than 10 years. Here, equity based investments are highly opted by people who are planning their retirement, school education with a minimum horizon of let's say 7 years or more. One of the other options and the best advantage of an equity based fund is I can have multiple sectors in an equity based fund too. So let's say I go in for a pharma sector, or maybe an agricultural sector, or maybe even small amounts in gold. As you diversify and as you go in for an equity based fund, what happens is you are partly an owner in the company also. So rather than me investing a big chunk in a company, right, I buy small amounts. That is what we call as systematic investment planning. Every month we invest a small amount in a particular fund such that the fluctuations in the market really do not disturb me mentally, but my money will keep earning money because I am looking at a long-term horizon. Some may ask, what is the return in case I invest 3,000 per month, let's say for a horizon of 20 years? You could say if you stay invested with an average return of approximately 12 to 15%, that's a remarkable investment return that equity-based funds have made. We can definitely ensure that we get a crore plus of kitty. Now, when we are investing bit by bit into equity based fund and in between we need to stop our investment for some reason, our suggestion would be please do not stop the investment, just stop the amount you are investing but stay invested such that over a period of time, as I look at my returns, it would definitely ensure that the capital and the amount that is already invested and earned the interest earns compounding interest from time to time. That is where we say over a period of time, 10 years plus, a person definitely gets 12 to 15% of a return in equity based fund. Next comes a debt based fund. A debt based fund is basically government securities or AAA bonds where my capital is invested and over a period of time I do get, let's say, not a fixed return but a return which safeguards my capital. When I invest in a debt fund, I need to ensure that whatever is the return that is coming in is more or less as much as an FD would give me. So a fixed deposit return gives a net return of approximately 4 to 5%, but at the same time, debt funds over a period of time do give you even approximately 6 to 7%. Now, who should look at investment in a debt fund? Generally, it is said that people who want security, let's say persons after the age of 50 would really not like to take a very high risk on the amount. So parking a part of our lump sum amount into debt fund, park monthly investment into equity based fund, and ensure that you have your returns in place whenever you require an emergency fund. You can liquidate a debt fund. One of the other options to an equity based fund is you park in the capital and bit by bit diversify every month small proportions into a monthly investment. So over a period of time, what happens is my equity, my lump sum amount that I have parked already into equity gives me a good sufficient investment return, and as I park in small amounts, I have the surety that there is a goal which is oriented. Let's say I am looking at my child's marriage after 20 years, or I am looking at a substantial income coming in for a foreign trip. This all will get accumulated, and as you fetch in the returns after, let's say, 10 to 15 years also, you can go in for a partial withdrawal or a total withdrawal and have goal based mutual fund investments. Why is equity based fund or even a mutual fund opted for when it has such a high risk? The reason being, equity based fund has high risk, but then it has high returns too. As I always say, आम का पेड़ आम तैयार होने के लिए आप पेड़ को जैसे 12 साल देते हो, वैसे ही थोड़ा टाइम अपने इन्वेस्टमेंट्स को भी दीजिए. One of the best investments to beat inflation is mutual funds. It is very easy to sell off when I make an equity based investment, because when I start a mutual fund investment, we start with a demat account. Demat account is nothing but an online account that you would be getting at the start of making this investment. Whenever you want to sell off the equity based investment, all you need to do is 4 steps which you need to go when you are online, and as you finish the process, within approximately 7 to 10 working days, the amount gets transferred into the registered bank account. That is why they say that a mutual fund is really very easy investment. As much as it's easy to buy, the same is the process to sell it off too. You have wide varieties of mutual fund to choose from. Let's say a young investor with a stable income can park in approximately even 10,000 per month and ensure that at his age of 40 years, after a horizon of 15 years also, get a lump sum amount such that he can even buy a house. So depending upon the financial goals, you can address your mutual fund investments too. One of the basic important aspects in a mutual fund I would like to draw your attention to, if somebody has gone in for an equity based mutual fund and one needs to, let's say, may have not made a will, equity based funds, whoever is the nominee would get the proceeds of this equity based fund investment that we have made. Next we go on to a person who has in the major category. Okay, here I would like to draw your attention. The major categories and subcategories here are large cap, mid cap, and there are others too. We have bond funds too, right? Why? What are the reasons that mutual fund may not be right for you? If you're looking for immediate returns, let's say I have parked in 10 lakhs and I want money tomorrow, I want a real good amount coming in. No, mutual fund investments would not be the right option for you. Liquid fund, yes, you may take a chance where for a short period, in case you are parking your funds and you want to withdraw it after a period of time, maybe 2 months, 5 months, yes, liquid fund is one of the good options. Another option to mention here is government bonds, of which I will definitely highlight in my next session. So the key points in investing in a mutual fund is, one is diversification, another is there is professional management, because if I invest directly in a particular company, I may have a high risk of losing the amount. But when I go through the route of mutual fund, at least I know the fund managers are out there taking care of my money and ensuring that it's a pooling of investments by a lot of other investors. And when there is a pool of amount that is going into a company, the risk is much lower and the returns are much higher. Easy, as I said, of buying and selling. And yes, there is a range of options that come with mutual fund investments. Any questions coming here? Anybody would like to ask anything? Okay. One more important aspect in investing in a mutual fund is, whenever you are deciding the amount that you want to invest, please ensure that you stay invested, because a lot of times what happens is, जैसे market fluctuations होते हैं, people tend to get panicky on the returns. मेरा पैसा डूब जाएगा तो मेरा ये हो जाएगा, वो हो जाएगा, कुछ नहीं होगा. If you have really taken the advice of the right expert, maybe your financial expert, financial advisor, or a person who has been an expert in this industry, trust me, mutual funds are one of the best options to beat inflation and ensure a good substantial income coming in over a period of time. That's it from me. This is Dhamishta Shah, leading financial advisor. Do write to me more on the sessions that you would like to.